Seuraavana pääsemme seuraamaan ajankohtaista paneelikeskustelua Pohjoismaiden kiinteistömarkkinoista. Keskustelun isännöi Newsecin Head of Research Valtteri Vuorio. Keskustelu on nauhoitettu etukäteen, joten emme pääse välittämään panelisteille kysymyksiä. Ole hyvä, Valtteri.
Kiitos. Eli seuraavassa osiossa käsitellään Ruotsin, Tanskan ja Norjan tutkimusjohtajien kanssa meidän kiinteistömarkkinoita vähän tarkemmin ja syitä viime vuoden aktiivisuudelle, käsitellään vähän trendejä ja mietitään muutenkin tulevaisuutta. Pohjoismaat on yksi yhtenäinen ja yhteinen talousalue ja kiinteistömarkkina. Pohjoismailla on hyvinkin paljon merkitystä eurooppalaisessa mittakaavassa. Ja Newsec toimii kaikissa Pohjoismaissa ja me käsitellään erinäisiä asioita päivittäin meidän kollegoiden kanssa. Tämän takia on tosi mielenkiintoista näyttää tämä seuraava osio myös teille ja pohdiskella yhdessä näitä erilaisuuksia ja yhteneväisyyksiä meidän kiinteistömarkkinoiden suhteen. Mutta mennään tähän osioon.
The economy has recovered rapidly since the downturn caused by the pandemic. The Nordic region's economic performance during the pandemic was quite outstanding, and all the Nordic countries have outperformed the Eurozone and UK. Now, I won't be talking about too much of the Finland's economy here, since during the live outtake of the webinar there is an economic outlook presented. But as an interesting detail from the Bank of Finland's forecast, I will mention that the pandemic is still having an impact on the economy and new restrictions can be seen to happen. But the economic impact of the pandemic waves has been smaller always in the next wave. The possible new waves in the spring and maybe autumn of 22 will hopefully continue this path of smaller scale impacts. Adam, I know that the economic growth has remained very strong in Sweden. Can you tell us a little about the economic environment and what is the outlook for Sweden?
Yeah, for sure. We've had very strong growth, as you say. We actually ended up with over 5% growth in 2021 and a quite limited downturn in 2020, as for all the Nordic countries, which means, as you say, that we have the strongest cumulative GDP growth really in the entire Western world in our Nordic region. And yes, Sweden has been no exception. Of course, it's been talked about a lot whether our lack of restrictions or lack of tight restrictions has had an impact on economic growth or not. The consensus is that maybe it had a very small impact, but because the Nordics as a whole also had very strong growth, even though the other countries had stronger restrictions, it's probably not the lack of restrictions which has been the deciding factor, but rather other things. I mean, adding on to that, going forward, we do see very strong, strong economic forecast still. We have quite high unemployment in Sweden compared to a lot of compared to the other Nordic countries and compared to Europe as a whole. But that also means that we do still have some capacity which we can use to grow, so to speak. In general, things are looking upwards. Of course, there's outside risks like the ongoing situation with Russia and Ukraine, which could have an impact. But generally, we're quite positive about the forecast and growth. Slightly under 4% this year is expected, which is quite strong.
Interesting. Karen, what about Norway?
Actually, the Norwegian economy is very promising at the moment. We, as other Nordic countries, had a steep drop in GDP growth during first part of 2020. We dropped by 11%, but it has since turned around and we are now set for 3.5% growth in 2022. We lifted all COVID-related restrictions here in February. And we are currently seeing increasing employment, and the employment rate is back down to low pre-pandemic levels. And further, I believe we were the first economy to hike our key policy rate post-corona. And we actually hiked it for the second time just before Christmas last year, and now stands at 0.5%. And if all goes as planned, you never know in these days, the Norwegian Central Bank will hike it further by 2 or 3 times this year. Of course, we have rising wage growth and higher imported goods inflation, and that is expected to push up underlying inflation ahead. Many countries are talking about the fear of sticky inflation, but it's not as high the fear here in Norway. The current outlook, I would say, is an economy with high activity, higher than pre-pandemic levels. And we're seeing continued improvement in the labor market, and private consumption is set for solid growth. So all in all, favorable economic backdrop for commercial real estate, but we need to assess the impact of increasing swap rates on current low yield levels here in Norway.
All right, and Robin, what about Denmark?
Well, things in Denmark are going quite well as well. Much more positive than anyone would have thought just a year ago. 2021, we had a growth rate of almost 4%. Much of it, of course, was a recovery from 2020. But the thing is that 2020 wasn't that bad. I mean, obviously there was a drop in GDP, and particularly at the beginning of the year with all the restrictions. But actually, I think it's interesting to compare it with the experience of Sweden, for instance, because we had very tight restrictions in 2020 to begin with, and that impacted the economy in the first half. But it seems as if the economy sort of got used to this. So when society was opened, the economy rebounded very, very rapidly, and it seems that the impact of the lockdown was very temporary, and that also means that we just had the last phase of restrictions here imposed in December. They were all lifted in February, and it appears that there's been almost no visible effect on employment, unemployment, or anything. So it seems that the economy has become more and more resilient to this. So things are looking quite good. The big issues at the moment, economic issues, obviously is inflation, which is quite high at the moment, 4%, running at 4% at the moment. And expectations are that inflation will stay high, running about 2.5% on annual level. So it's not disturbingly high, but much higher than we've seen for many years. Interest rates, obviously, they are still very, very low. Most forecasters believe that they can only go up, but they've been saying that for a prolonged period, and apparently it seems like they're going up at a very moderate pace at the moment. And with the inflation in mind, this means that actually the real interest rates have become even more negative than ever. So I think the main challenge actually at the moment is that the economy is almost running at full capacity. Unemployment is about 2.5%. We have to go back to before the financial crisis to reach a level below that. Most businesses, most industries are their main restriction in terms of productive capacity is shortage of labor. So you can say it's kind of a luxury problem at the moment. So the big issue is how long can we sustain this economic boom that we are in the midst of at the moment. But it looks fairly well. And I think if you look at consumer expectations, if you look at business expectations, 2022 looks at the moment quite positive.
From our transaction dashboard, 21 was exceptionally strong year for the Nordic real estate market. The real estate investment volume in the Nordic and Baltic countries was around 77 billion last year, and this significantly exceeds the level of transaction volume normally experienced. Of the Nordic countries, Sweden, Norway, and Denmark set new records in terms of real estate investment volume. In Finland, transaction volume was around 7 billion. So we did not reach new records as in the other Nordic countries, but the year can be described as an active and successful year as well. We estimate that Finland's real estate investment volume will increase substantially from 21, and even new record is possible. What were the key drivers behind your country's record high transaction volume? Karen, if you can elaborate first on this.
Yes, as we see here in Norway, I think there are several factors for the record-breaking volume here in Norway. I think most of them also apply for Denmark and Sweden. But first of all, I would just like to say that commercial real estate became a very good investment alternative with its risk-return levels during 2021, with high volatility still going on in the stock market and the bond market. And as such, several investors, I think, shifted their focus towards cash flow in the real estate market. And secondly, segments not traded during 2020, when everything was very uncertain, came back to market. So in Norway, we saw several large transactions of shopping centers and hotels at volumes we haven't seen in years here in Norway. And of course, the interest for logistics has continued, and the record volume here is helped by foreign investors. They have been largely absent from the logistics segment in Norway. I think we have high rents and low yields compared to Europe. But lastly, and most importantly, I think also Adam will touch up on this topic, is that we saw huge activity in the M&A segment. Usually here in Norway, we have, I would say, around 3-4 very large transactions of portfolios during a year. And occasionally we have, say, larger sales of companies. But in 2021, we had 34 transactions above 1 billion NOK, and we have over 20 M&A transactions. And the 3 largest M&A transactions made out around 27 billion NOK, and that's actually 16% of the record-breaking volume here in Norway. So yeah, that was sort of the main reasons here in Norway.
Yeah. Robin, what about Denmark?
I think you can point to one very, very important factor, and that's the influx of international capital. So, because what happened was that almost the entire increase in the transaction volume was driven by international investors. So, and what we saw was particularly investors not from our neighboring countries, which will typically be the main buyers, particularly Swedish investors. What we saw was a very, very strong influx of capital from countries such as the US, the UK, Germany, France, countries that are normally not that strong on the Danish market. And this was a combination. What they were looking for was a combination of large portfolios or very, very large single properties. And they were, I believe that what they were attracted by also was the possibility to buy assets for sort of reasonably high yields compared to many of our neighboring countries or other countries in Europe. Because what we saw was very, very strong growth in their demand for industrial logistic properties, where even though yields have compressed significantly in Denmark as well, they are considerably above most other European countries, but also residential assets. And that's simply because it's available. It's a product that's available. There have been a lot of purchases of ongoing projects, new projects, but also, of course, existing stock, huge portfolios as well.
Yeah. What about Sweden, Adam?
Yeah, I mean, I think what's really interesting in the Nordic region is, in some sense, we're very similar, but in other senses, there actually are quite distinct trends between our countries. As you can already hear when comparing what Karen and Robin said. Sweden is in some ways similar to Denmark and Finland, and in some ways to Norway, and in some ways it goes its own way as well. International investment is really not a driver in Sweden. Last year, international investment accounted for 17% of the transaction volume, which is one of the lowest shares in recent years. Whereas in Finland and Denmark, it's around 50% of transaction volume, and there's a lot of inter-Nordic investment. But international investors really can't be said to be driving the market in Sweden, maybe for logistics, but aside from that, not so much. Instead, we have partly what Karin mentioned, the large M&A deals. They accounted for 39% of the transaction volume in Sweden last year, with large transactions which you might have heard of being Castellum's purchase of Kungsleden and Corum's purchase of Klavern, for example. Both transactions for over 30 billion crowns, and also mega transactions like the sale of the Achilles portfolio to Heimstaden, which is maybe technically not an M&A deal, but can be seen as an M&A deal, with Achilles selling their whole Nordic portfolio. But it's really not only the M&A deals which have driven our volume. They've accounted for a large percentage share, of course, but we also have a record in terms of the number of deals. We had 799 transactions completed over 40 million crowns last year. In a normal year, we have around 500 transactions. And even if you take away all of the M&A transactions, it's actually still a record transaction volume last year. And of course, there were some M&A transactions in previous years as well. So absolutely, M&A deals are what led to this massive record volume, which you can see in the diagram here. But we also saw very widespread activity across all segments from a wide range of different types of investors, which also drove volumes as well.
Yeah. And Adam, you've discussed it here as well, but the share of international investors in Norway and in Sweden is not as big as it is in Finland and in Denmark. Can you elaborate some of the background of this?
Yeah, for sure. I mean, Sweden and to some degree Norway, we have a lot of very large and strong domestic investors. In Sweden, we have around 50 listed property companies, whereas in Denmark and Finland, you have roughly 5 each per country. And in Germany, there's 39 listed property companies, and Germany has 8 times Sweden's population. So in some sense, we have too many property companies, which is what leads to these large M&A deals. But it also means there's a lot of very strong domestic capital, which leads to strong investment volumes on the market. And to some degree, we don't have the euro, and the Danish crown, of course, is its own currency, but it's pegged to the euro. So there are some hedging costs for Sweden and very much higher hedging costs for Norway, which also leads to some issues in terms of for some international investors. And then, I mean, to some degree, I actually think Finnair contributes to the large degree of Asian investment that you have in Finland with the direct flights, which we don't have here in Sweden. But perhaps that's a bit of an aside. But maybe Karin, you want to fill in on other reasons that Norway doesn't have so high international investment?
I largely agree with you, Adam. When you have a prime yield around 3.25%, and you have a hedging cost on the Norwegian kroner up to 75 basis points, the return is not that good for international investors. I think you rather have a 2.5% return in London than in Oslo. So. And of course, in Norway, we have very much short and swift processes and several deals being made off market. So, and international investors coming to Norway, I think they sometimes spend too much time in order to win processes. So, yeah, hedging costs and lots of off-market activity is the main reasons in Norway, I would say.
Yeah. And in Finland, we have a lot of, obviously, Swedish investors, as well as US and German investors as well. And you mentioned, Adam, the Finnair connection to Asia, and that we'll see what happens after the pandemic is over, whether we get more of the inflow of Asian investors as well. All right. Now, we've talked a little about the investment volume and how international investors have big interest in the Nordic countries and the cross-border capital is very active. What about the demand in a more detail? Where do you see the massive interest and strong yield compression at the moment? Maybe Karen, you can start with the Norway.
The largest yield compression in Norway is probably not a big surprise. It's in the logistics segment and for the core sort of distribution hubs. Much help, of course, from the increase in e-commerce, and there's a considerable reduction of residual risk for the segment. There are a lack of available good plots along the main thoroughfares in towards Oslo. And as you might know, retailers, they compete on time, not on price. So it's very important to stay close to good transportation hubs. So the few ones available are seeing very sharp pricing here in Norway. And as a result, we're also seeing a relatively sharp yield compression in the normal segment for logistics, as core is more difficult to get your hands on. And as always, core office in Oslo saw a compression during the pandemic. The most centrally located assets with safe tenants are always safe haven during rough times. And as such, we also have a large part of our public tenants often located at Helsfyr, just east outside the city center in Oslo. So we saw a sharp drop in yields also in this area.
Yeah, and Robin, is the situation similar in Denmark?
In terms of the logistics segment, definitely. This is clearly where compression has been the strongest, and the reasons are pretty much the same as in Norway. But I can add also that we sort of started out from a higher level, from higher yields. So the pace of compression has been quite rapid throughout 2021. But we started the year with yields of around 5%, and now we are approaching 4%, and still sort of above comparable countries. So very strong compression on that market. What's interesting though is also that the sort of interest in storage facilities in general has increased, which is something to do with sort of these distribution directly to the consumers. So where we have a lot of interest from sort of retailers looking for space actually in the city, not outside the city, but in the city, which has increased obviously the demand for space, but also the sort of the value of those properties. So it's not only prime logistic, but actually it's storage and warehouse in general where yields have compressed significantly. And then the second segment to mention would be residential. And that is, I would say that's a very structural story, which means that the demand seems pretty limitless. There's a very, very strong interest for rental properties, partly driven by very, very high prices on the owner-occupier market. So this benefits the rental market. And what we've seen particularly is that there's an interest in housing for young people, student homes, etc. So there are quite a lot of new development, but also conversions and acquisition of existing sort of youth housing, residential and student homes.
Yeah.
For office, yield compression has been not very significant, actually.
Yeah. And Adam, what about in Sweden?
Yeah, we've seen quite substantial yield compression for really most segments. I mean, similarly to Norway and the Nordics and the rest of the world, I guess, logistics has probably seen the largest drops in terms of basis points. We're down like 100 basis points in some locations in 1 year for logistics. But we've seen very strong compression for residential as well, newly produced residential in particular in the metropolitan areas, there's very strong demand for big drops in basis points for that. Office, we've seen pretty strong yield compression for. There haven't been that many transactions completed, but the ones we have seen have been at very strong new record levels, substantially below pre-COVID levels. A lot of transactions, some completing at below 3%, around primarily in Stockholm, but also in Gothenburg. And I mean, what's worth mentioning also is, big box retail. We've seen quite substantial interest for grocery stores in particular, strong compression there. And also public properties, which is a much bigger segment in Sweden and Finland than it is in Norway and Denmark. We've seen quite substantial yield drops for, schools, nursing homes, those kind of products as well, throughout 2021. Not as strong as for logistics, but still indicating very strong interest. And yeah, generally, the only segments where we haven't seen strong yield compression is perhaps hotels and shopping centers. But perhaps that's coming now in 2022.
Yeah. So going forward and looking backward, do you guys see any interesting trends in the property market? And what kind of trends are there expected for further on? I will mention at least one thing from Finland to keep it short. Year 21, we saw an increasing office investment demand outside the Helsinki metropolitan area in prime assets, and reasonably large office transactions were completed outside the Helsinki region. These transactions in the end were the reason why the share of the office segment remained at its usual level of the total transaction volume, since the capital region office transactions decreased almost 40% from previous year. And this is sort of an interesting to see how this trend will continue this year as well. Maybe Adam, you can start. Do you see any sort of interesting trends or phenomena in Sweden's property market?
Yeah, for sure. I mean, one interesting trend to mention, which you can also read about in the Newsec Property Outlook, which will be released a week from now on the 9th of March, is the shopping center trend, which I think hasn't been, shopping centers have been talked down quite a lot during the pandemic, both in the real estate industry and in the media. But actually, if I spoil our findings a little from that report, if you look at turnover in 2021 compared to 2019, it's actually up for a lot of shopping centers around the Nordics and particularly in Sweden. And some trends we see are that even things like clothes and shoes, turnover is actually up in shopping centers in 2021 compared to 2019. Which I think creates a lot of opportunities for those who are willing to sort of take a bet on shopping centers remaining strong going forward. Beyond that, I think there's a lot of interesting trends. I mean, as I mentioned, there's a lot of compression across the whole market. Light industrial, as Robin mentioned earlier, and warehouse definitely seeing an upswing and sort of being carried along by the hype attached to logistics. I think there's opportunities on, the office market. Again, if you're willing to take a bet on occupancy rates returning, perhaps not to pre-COVID levels, but to stronger levels than in other countries, which is a fairly reasonable bet to take in Sweden, given the light restrictions we had and the trends we see now in terms of, we have occupancy rates of around 80% of pre-COVID levels, which is a lot higher than what you see really globally. So I think the office market, there's some strong opportunities in Sweden, and public properties, as I mentioned. Generally, yeah, quite a lot of interesting trends going forward, and it's important to have the right advisor to make sure you can spot those trends.
Absolutely, and in the Finnish Property Outlook, which is published on the same day as this webinar comes out, we have a really interesting article on the light industrial sector called "Light Industrial is the New Sexy." So, and that is by Anita Simasa from Newsec. What about Denmark, Robin?
Yeah, I think one of the things that we will keep an eye on is actually there might be a change of trends. and I'm thinking about the retail, particularly high street retail, which has been performing quite poorly over a couple of years, not only during COVID, but even before that. And it seems like that this segment has gone through a kind of adjustment, and by that I mean the rents have been falling for quite a while, yields have been rising for quite a while, and what we saw in 2021 was that yields have started to stabilize, rents continued to fall, but we see some trends or some indications that rents may have sort of reached a level now that where they've bottomed out. So and we could also see actually that take up from retail in Copenhagen started to increase. We could also see the transaction volume of retail properties started to increase. So it will be very interesting to see whether this will be sort of whether we hit the bottom in 2021 and we will start moving up in 2022, and partly driven also by the sort of the yield gap compared to office, residential, logistics, particularly where it's beginning to look reasonably cheap at various locations. So I think that's going to be quite interesting to look at. And then actually also as Adam mentioned, the light logistics. Well, you know, the demand for logistics in general and warehouses is so strong. It would be interesting to see whether sort of the willingness to look for non-prime, sort of more average stuff or even below average, how strong that will be, simply because occupiers will have to take something that's not prime if they want to get something at all. So that will be interesting to see whether the sort of the risk, how much risk occupiers and investors will be willing to take in that segment.
Yeah.
Residential, I think it's quite predictable. That trend will just continue. That will be by far the most liquid market and the most uncomplicated market in terms of interest and demand.
Yeah. All right, thanks, Robin. What about current Norway? Any interesting trends coming up from there?
Yeah, I could of course have talked about logistics as well, but actually we have. I can mention two other sort of starting trends in Norway. I think a small trend, or sort of a trend we have expected to come to the market at some point, is actually in the hotel segment. Here in Norway, the lease contract always has a combination of turnover rent and a minimum rent, thus leaving very little risk on the operation on the landlord. But one of the first hotel transactions we saw last year, we didn't see anyone in 2020, but they started to come to market last year, was actually without a minimum rent in the contract. And as such, more of the risk is shifted towards the landlord, and we believe this was just the first of a new trend here in Norway. And also, we actually saw a huge increase in the project segment, sort of development with a very long timeline. And one would actually maybe believe that the cash flow is king during uncertain times. But the pandemic was obviously time to realize projects. One would not, if you were not interested in developing it yourself. And I think several investors were well capitalized and in position to take these investment opportunities that there were lots of in the market during the pandemic.
Yeah. So a lot has been talked and written about COVID-19, and there is quite little to say anymore. The virus is still among us, and vaccinations are in the third round. But the beginning of the end of the now 2-year pandemic has already begun to raise its head. Is there anything that has surprised you when talking about the real estate market? Robin, if you can go first.
Yeah, I think what surprised me most was the sort of the resilience, how little impact it actually had on the property market. And even, especially on the residential market, what we saw was an acceleration of demand, purchase. So it actually fueled a market that was red hot even before COVID. But generally, yeah, I would say the resilience is as if it didn't really have any significant impact on the market. There was a short period of panic, and there was a period where transactions were put on hold, but it was surprisingly short. And in terms of pricing, the impact was actually nowhere to be seen.
Yeah.
So resilience, definitely yes. But also we are wondering whether we as a country or as a region, whether this status as kind of a safe haven has meant that maybe that could be one of the reasons why we have outperformed other European countries, that they look to the Nordics in times of sort of distress and uncertainty. And that obviously begs the question, what happens when we return to normality? Will that mean that, for instance, much of the international interest that we got, will that sort of disappear? I don't think so. But yeah, generally, I'm surprised that the impact was so temporary and so insignificant.
Yeah. What about Sweden, Adam?
Yeah, I mean, if anything, you could say the pandemic has almost helped the real estate market by, as Robin mentioned, accelerating a lot of trends. And, you know, we've seen these enormous record transaction volumes across our entire region and in Sweden in particular. And I do think we have to say we didn't think that this is what would happen in April 2020. When, as Robin mentioned, everything was on hold and everyone was worried and transactions were called off and so on. And I think those people who called off those transactions now are probably regretting their decisions, as they could have purchased at quite a lot higher yields. So yeah, I mean, really the scale of how much compression we've seen, really. And but I guess, I mean, what you could mention as well is I am a little bit surprised by the sort of short-termism which we see on the transaction market as well, where, you know, we see, okay, hotels are shut now, retail's not doing so well now. Okay, no one wants to buy hotels or retail. Yeah. I'm a bit surprised by the lack of long-term perspective among some investors, where, you know, if we think about sort of philosophically about humanity as a whole, we're kind of creatures of habits. Of course, COVID meant that some things changed overnight, but really the way in which humans behave is not going to change overnight. In the long term, you know, tourism is going to keep increasing, so a lot of hotels are still going to be needed, even if, you know, business hotels a bit less certain. And also people want to meet each other, so you know, a lot of retail space is also gonna work in the future, even if it looks a bit different. So I guess that's one other dimension which surprises me a little bit, I would say.
Yeah. What about Karen? Anything that surprised you?
I think I just need to add on Denmark and Sweden here. The resilience of the market, as the past decade has been characterized by high activity and record pricing on commercial real estate, and we thought that the pandemic would halt this development, because at some point it needs to stop, and it didn't. We have record volumes and record sharp yields, and that might be the biggest surprise. Then I think it might have to do to the fact that the pandemic has accelerated trends that they were already on the horizon. Changes were expected maybe 7, 10, 15 years down the road, is already here. And investors are seeing this as a very favorable time to invest. That's just a guesstimate from my side. And maybe for Norway, I think we would have expected more focus on the cash flow of the investments, which was true during 2020, early pandemic time, so to say, where you needed a public tenant or very solid tenant to have a transaction. But this has not stopped the market in 2021. We see liquidity all across the line. So yeah, I think I just need to add on to Adam and Robin here.
Yeah. Then the retail has been obviously hit hard by the COVID-19 crisis, and the Nordic property outlook, as Adam mentioned earlier, by Newsec comes out in a couple of weeks or 1 week after the webinar. And there is a great analysis by you of the physical retail market. And I suggest anyone to download the outlook as soon as it comes out. But before that, and before we end this roundtable, now that the pandemic is perhaps nearing its end, what can you tell us about where is the retail sector heading after the pandemic? Maybe Karen, if you can start, any insights from Norway?
First of all, I totally agree. You should download the report. It's a very good text about the market there. And I think the general trend in Norway is much similar to the ones you can read in the report. But I think physical retail is coming back, maybe in a bit of a different form. But we are social persons that wish to meet each other, and maybe we will go shopping on a different kind of way. I think maybe we see a bit of a trend in Norway where risk is shifted more towards the landlord. You don't have that much of maybe a turnover-based rent. Maybe the landlord needs to take more of the capex in order to secure a tenant, or that the tenant wants more flexibility in the contract by exit options that we haven't seen before. But for us as a consumer, I think we will be back to. I think we have shifted some focus, but some trends are coming back as well.
Yeah. In Denmark, Robin, what's going to happen to retail?
I think, well, as Adam mentioned earlier, I think there are some patterns that are not going to change. People are coming back, and we can see that from the footfall, and we can see it from turnover, that things are getting back to normal. It will probably happen at different paces, at different retail formats, at different parts of the country, definitely. And but if you look at it at a broad perspective, I think that 2022 is going to be a year where things will get back to normal, meaning that obviously retail has seen a major change in consumer behavior over many years, and I think that trend will continue. But I think these sort of the anxiety and the situation that we've had for almost two years, that will, I think that will pretty much disappear in 2022. And I think also looking at one particular thing, I think there is an sort of an understanding amongst many retailers that they sort of need to work together, retailers and landlords. But just to give an example, we see in Copenhagen, one of the main pedestrian streets, the landlords are really getting together to sort of regenerate their part of town, understanding that it's not enough that their particular property looks good, and the retailers need to understand that their particular facade is not enough to, attract footfall, to attract customers. And we actually see some efforts to go together to make sort of to elevate the general feeling and the atmosphere of a retail destination. And you can see for some retail formats, it's easier. It's probably easier in a shopping center than in a pedestrian street. But I think we're going to see that. We actually do see that already. The need to sort of raise the bar and make the shopping experience more interesting.
Yeah. And Adam, what's going to happen to retail?
Yeah, I mean, as we've mentioned, I think an interesting parallel you can draw is the one with office space, where everyone sort of agrees that we need more meeting space in our offices. but we might need roughly the same amount of office space as before, but it will have to look different. I think it's a very similar picture for retail. We still want to meet, we still want to do things, but we perhaps want the actual meeting place to look a little bit different. So we need more of those experiences. We need to innovate a little. I think there's a lot of exciting things, exciting, unique Nordic things which we're interested in, which you could have more of in shopping centers, like skiing experiences, or paddle and all that kind of thing as well, of course. But different, trying to think a little bit outside the box and not just going for the standard cinema and restaurants. We need a little bit more than that, I think, in the future. But in general, I think things look very promising for retail, in spite of what you might read in the media. So retail is dead, long live retail. That's what I say.
Kiitoksia panelistimme. Hyvä yleisö, huomioittehan, että äskeinen paneelikeskustelu oli nauhoitettu 22. helmikuuta eli viime viikon tiistaina.